All right. Welcome to a new daily recap. We're gonna recap yesterday's price action of Thursday, the 6th of April. I had no time yesterday, so I'm gonna do it today. And we're gonna start with left my drawings from yesterday on purpose so we can check out what happened. And go from there. I think it's good to keep it on actually. I know people like cleaner charts, but this way it's more transparent. I can move on from the previous drawing onto the next drawing. Yeah. So let me take a gum. Let me check my Instagram. Check out my latest Instagram reel. It's funny as fuck. So we had this bearish range. Sorry, let's start in a high time frame. Yeah, so we got those two previous daily highs above. And now I don't need to make the mistake of going into today's price section yet. We took our previous daily low. We wanted to achieve an overall discount for this bullish range. And I had the idea, let me see where DXY is. Yeah, so DXY want to see come higher, and then maybe come lower. This is wrong. Is this right? Yeah. Oh, we wanted to see DXY come higher overall, and either to hold on to this structure or to break bullish. And if we hold on to this structure, it should be there is like over here we got the bullish break as well on DXY. Oh yeah, drew it on. So we got that bullish break. So we wanted to see a discount, so this liquidity to be taken, and then a continuation down for DXY. So actually seeing DXY come lower, we might see Euro come higher because DXY has still room to the downside while Euro already filled up this area to the upside. So that's quite interesting. We can remove this, We see how we react from this area for now. So we can see that's the support and resistance area, this whole area over here. So gotta watch and see how we move from there. But overall, yesterday I said like I wanted to see price come in here and then turn around. And for now, we had that happening. I want my ranges on, or yeah, my sessions. We talked about the short. I made a case study about that, so I'm not gonna dive deeper into that. And yeah, that's basically what happened. We can see price took out. We got the short entry, which is covered in the case study. Frankfurt pushes price up. We take liquidity, react from that 50-minute POI supply zone. Price turns around. This is the POI. I don't know why I actually deleted it. And yeah, I'll just keep this color. And then we turn around. So yeah, that made sense. So this is our London swing, so to say. We got Asia lows still intact. We got New York low now still intact. But essentially Asia low stayed intact because we got the previous daily low followed by the bullish break. So that's why Asia low stayed intact, because you got that structure, bearish structure, high, low, lower, high, lower, low into bullish break structure. And then we got the trap over here. So let's clean this up. Set of early sellers there. TP can go. Let's keep this for now. And then bullish order flow start to form. So I wanted to actually to long here even before taking that high, because there was not much liquidity in this leg down, but price didn't give me an entry until after here. And then we can dive into the long trades for London, because I think there are some long trades. So we take internal range liquidity. This is where I took partials. You can see we have a set of early buyers. This can go as well. Yeah, I'm checking EG Maybe that's a pair for me. So we got the bullish break, bearish break, bullish break. And essentially we get this. So this are early buyers. Hold up. Because we know we're in London, so we don't need to keep the session on. Early buyers on the way down. Got some early buyers over here as well. So you might look to enter from here. Like this. And that would have been a reduced stop loss trade. Why? So if you enter from here, let me check out what it looks like on the 5-minute. Yeah, so bit tricky done that one. Not really. Actually, it's a 1-minute one, so it's not really valid. But let's say we took it from the 1-minute, then you would have taken it like this. This would have been your break, and then this would have been your second break structure over here. As you can see, we just came above. So your entry would have been like this. 74, quite large. Let's look at this leg. It's right. Okay, so quite large entry. 74. Oh, that's actually decent stop loss. 4.1, 4.6. And after that, again, go to the 1-minute. And we reduce our stop loss to just below here. So that's a minor loss. Then we actually mitigate that. And there's nothing to mitigate, so we can go break even. That's my rule. So it's a break even trade actually, because you can see if this POI stayed intact, we could see price come up, but we can actually maybe put our stop loss below this wick. So minor loss. That's all right. And then we come further down. So another set of early buyers maybe here, if you want to class it like that, but essentially it's the same. We come down, we break bullish again. Now we got a proper 5-minute break. Oh, why do I delete that? And after that break, this is like clean. You can see this. So if you would have done that, doesn't fit my entry time. Oops, let's actually just do it like this. And then the long trade comes from this area. 79, 89. So a bit larger stop, but still decent trade. And now you want to target, actually you want to target this at least. So if we let that play out, you can see that we go break even after breaking this one and breaking this one. So definitely a break even trade or reduce stop loss. So break one high, break second high. Can expect price to come down to all the way here. So actually you should keep the trade, but it's not in the plan. So yeah, tricky one. Would say break even as well. Yeah, break even because there was news, so you don't want to stay in the trade on news. See those wicks? News wick taken out, by the way. News. But I can see confirmation based entry actually. So we break bullish, 50-minute, and then over here we get another 50-minute demand area we can long from. So let's keep that on. Let's make this a sweep. There we go. Let's remove the POI for now. Let's keep it like this. Oh, that looks cleaner. Same here. And we can see that we just reached the 50%. Just really just about. We got our early buyers, we got a high, a low. Well, actually, no. We got a high that then lead to new low. So not really early buyers. So that will probably not give an entry if you take it. So this is where I want to improve my strategy again. Because, well, you could class this as your early buyers actually. Maybe. But essentially, we got that sweep. We got internal range liquidity being taken. Break structure. Now I'm curious if this gives me an entry. I hope it does. So 212. It actually does. That's better. But another thing you could have done is take this very good. Oh, it's 50% for very good. So that's the same. And then you get your long entry, 3.5, so 4. And then we again try to target this high. That's our first target. Beautiful 1 to 3. Nice 1 to 4. Clean. Leave it. Take partials. And then overall target would have been over here. But you can see after we take partials at this high, price continues down. And then we got oh, my back hurts. Ooh. Ah. Come down, take out internal range liquidity. So we get a high, a low, fake range that being taken out. Partials come back to break even. Now we can remove all this as well. And now that what remains is this can go as well. A bullish break. Actually, a lag with quite some internal range liquidity. This one creates equals, very nice. But then it breaks bearish over here. This is the last low that led to that high. All wick breaks, so we can because of those wick breaks, we can see that this is probably a fake range. And then this is followed by another bullish break over there. And we take out liquidity over here. So I had these equals already marked out. Oh, I didn't mark, didn't have them marked out, but I had them in my mind. Like I knew that longing from here, we could probably take those first. And then we react from this 5-minute PY over here. Actually come below so we can take this area. Now let's see what it looks like on a 15-minute. Not really anything, but we could maybe use this. Well, we already tapped in here, but didn't reach the 50%, so we can then refine it to that one. We already tapped into that one. Now we tapped in deeper, so let's refine it to the 5-minute one. And I'm all right with that. And so we are in New York right now. We can see our early buyers. Early buyers taken out. We got swing break. Got several one. We got this for value gap, a bit tricky, but then we get our entry from the 5-minute. Yeah, it's exactly above that. Yeah, I think it's this one. I like that one. So you could either take it like this, or you could, what the fuck? Or maybe use this one. And then again, so this is where you want to use the for value gap. in my opinion, because it sits below liquidity already. 90. What? 80 and 90 actually gives you an entry. I think it's 81. 81. It's the one that sits 80. 90 taps you in. After we get our 5-minute break over here. We already get a return to discount over there, but no entry yet. So this is a bit tricky one. So we've tried to enter over here for that one. But this is our real break. If I'm correct, or that one. Oh, this one. Sorry. This one is a real break. Now I'm curious what happens. Oh, that's a bit annoying. Because yeah. This would have meant it would mean that yeah. So that would mean for me that this is a bearish break. And this would have been an entry for me. Because I want to enter in bullish area in bullish price action, but it's a beautiful trade. And this is the one you can long where into the premium of our for now bearish range, which was from this high down to this low. And the only thing you do here is go break even. You don't take partials. You don't take partials. You take partials after internal range liquidity. So over here you take partials 4.68 and you leave your runners run still to this target because it's quite nice. Or to this high maybe. I would just target that. And that's a 1 to 9. Beautiful trade. And it leaves when it goes to this overall support area. Beautiful trade. No, it's a bit tricky with the 5-minute swing, but if you take this one, like this is the proper swing, it already breaks. That's a bit unfortunate, but then yeah, if you take it like that, you just keep it here. Even if you no, because even if you reduce it, take it from the 5-minute, you would have put your stop loss down here, 9.5, and it would have taken you out anyway. And my entry would have been at 4, so 14. And then same story here. So this is not the right risk to reward. So then you target this high for 1 to 4. Yeah. And take partials there. But I would have gone for that 1 minute because it broke anyway. If you take one, just take that one. Just get the sweep over here. Nice sweep over here. Break, entry. Yeah, that's basically PA from yesterday. Guess we stop here. Yeah. Can see that slowdown to induce sellers from this wick because they thought, oh, strong turnaround. This is strong turnaround level, but just new, so we know it's a fake out. And slow down, no bearish break. That would have been even better to induce sellers and a continuation up. Yeah, that's it. Peace out.